Hello, and welcome to Feedstuffs 365 and Beef. I'm Ann Hess. Where are prices headed, and what does supply and demand look like in the weeks ahead? Joining us today to discuss what's ahead for the cattle market is Trey Freeman of Ever.Ag. Welcome, Trey, and thank you so much for joining us.
Hi, Ann. Good to be here again.
Before we jump into today's discussion, I'd like to remind the audience tuning in to post your questions for Trey in the chat, or if you're tuning in via social media, you can post those there in the comments. So, Trey, what's happening in the cash market for fed cattle?
Cash has been grinding low over the last couple of months. It finally slowed its decline last week, trading mostly steady from the week prior, with the 5 area weekly steer price holding support at 180, which is the lowest price since about the first quarter of this year. Moving to cattle futures, they seem to be outright searching for unfriendly news recently. The anthrax story out of Wyoming, the toll it took on futures, and then that headline disappearing from the news cycle in just a few days. The stock market, we see a 600 to 700 point break in the Dow. Seems big, but that's what, a 1.5%, maybe 2% decline. Fairly small. We've seen a rebound over the last couple of weeks, but have run into resistance around 180 in live cattle and 240 in feeder cattle. Looking forward, my take into the end of the year, it's hard to justify a continued advance back up to 190 in live cattle futures and 250 in feeder cattle futures. I just don't see it likely that buyers are willing to step in and go long into an upcoming election, especially amid the financial uncertainty we're still facing, as well as the lingering inflation. So to see those prices again before year end, beef demand is really going to have to do more than hold steady.
So, walk us through what we're seeing on the wholesale beef prices and at the retail level.
Yeah, at the wholesale level, we're seeing a grind lower in choice and select. September is typically a weak month for beef demand, so this is not all that surprising. At the retail level, we continue to see stubbornly high prices, with all fresh beef retail value reported at $8.16 per pound for the month of August. This is about steady with the month prior and 33 cents higher than a year ago. Overall, we continue to see it trend higher, with month over month increases in 17 of the last 20 months. One component that may be keeping retail so high goes back to the packers keeping slaughter counts low. They're doing this to support box beef prices, but in effect, it's likely making it tougher for prices to soften at the retail level. Another effect of the lower kills is it's keeping dressed weights sky high. Steer weights were last reported at 941 pounds. That's a good 24 pounds more than a year ago. And heifer weights at 846 pounds. That's 21 pounds more than a year ago. So this additional weight, it's going to continue adding to fed beef production and offsetting a great deal of the lower slaughter counts into the end of the year. But looping back to your original question on overall beef demand, and this may be the ultimate litmus test to gauging beef demand moving forward, and that's the 90s trim market. It's been the all-star performer this year. Coming into January, it was trading 255. From the last week of June to now, it's leveled off and traded sideways between 370 and 380. Seems to have topped out a couple weeks ago around 376. And for the week ending last Friday, it's sitting right at support of 370. Seasonally, it tends to move lower into the end of the year, so a decline is expected. That's okay. What we don't want to see is a sharp drop off. That may be the major clue that consumers are turning away from beef as a whole and looking for value in other meats. So for context, since around mid-2022, pork has been relatively sideways, just under $5 per pound, and chicken right around $2 per pound, while beef has gone from $7.25 per pound to $8.15 in this same time frame.
So, are you seeing any fluctuation of people moving to chicken and pork with the beef price going up?
So what we have seen is consumers stepping away from the restaurant sector and more to the grocery store to buy their beef, and more at-home meals. And so that's the first indicator that maybe beef prices are getting a little high. What we're looking at right now is just the price change of pork and chicken over the last couple years. The pork and chicken just haven't changed that much, while beef prices again moved up to $8.16 a pound this last month. So we're starting to see a small maybe indicator there, but we haven't quite seen a move to chicken and pork yet. But that is certainly on top of mind when looking at those charts as far as where pork and chicken have gone straight sideways for 2 years.
Sure, absolutely. Let's talk about international beef trade. What are we seeing on the export and the import markets?
We'll start with the ugly first, and that's imports. Through July, beef imports are up 2.6 billion pounds year to date. That's 20% more than January through July of last year, or 436 million more pounds. Year to date, imports from Australia are up 229 million pounds, or 75%. From New Zealand, imports are up 41 million pounds, or 12%. This increase in Australia and New Zealand, it's a function of the expanding cattle inventories they've had, while ours has contracted, giving them more beef available to export on the global market. South America imports from Brazil are 99 million more pounds, or 31% more year to date. Uruguay, 75 million more pounds, or 77%. And looking at Canada imports from Canada are 35 million more pounds, or 8% more year to date. Looking at feeder cattle imports, from Mexico alone, we have imported 170,000 more feeder cattle. The State Cattlemen's Association of Chihuahua, they've provided incentives to help producers purchase registered bulls that'll improve herd genetics. That, along with the price difference for quality cattle at the border, has led many ranchers in the state to focus on improving genetics. This incentive program has played a sizable role in the amount of feeder cattle supplies in the U.S. and will continue to do so over the long term. Now, beef exports still underperforming relative to last year, but July showed some life where we had 18 million pounds more than July of last year. Overall, exports are still down 52.5 million pounds through July of this year compared to last. That's only down about 2.9%. So relative to expectations, exports haven't trailed as far behind coming into this year, even amid a persistently strong U.S. dollar.
You know, with exports still a little behind last year, any bright spots? I've heard some conversation about Japan. Any other regions that we are performing well?
Yeah, and Japan is one. You got to look at Japan, South Korea, and China. And Japan has performed well. China is a area of concern. We've seen a little weakness in their economy there, and a drop off of exports to China here this year. But Japan continues to be a good export market for us.
So we can't not have a markets discussion and miss talking about the rate cut yesterday. What's the implication of that on the cattle market?
So the Fed did follow through and cut rates by half a point. The stock market likes it, with the Dow up 500 points this morning, making a new all-time high. Cattle futures have liked following the stock market recently. So as far as cattle futures, a strong stock market could certainly give us some much needed upward momentum, or at least provide a layer of support moving forward.
So let's talk about monthly cattle on feed. What are the expectations going into that report?
You bet. Analysts' average guesses going in are on feed at 100.9%, placements at 99%, and marketing's at 96.6%. If that on feed average estimate going into the report materializes, then it'll be the fourth largest on feed number for September, behind 2020, 2021, and 2022. This larger number is a function of cattle being held on feed longer. Dairy heifers on feed have also played a significant role. So that is an area of concern going into that. Of course, we got to watch placements. Placements is always the hard one to peg. But that 99%, right at about level with a year ago, we'll see. Always a wide range, too. There's about 11% range in analyst estimates.
So as we wrap up our discussion here, what maybe some key takeaways from this month's report here? We're on Feedstuffs 365 once a month, and also have a column for Beef Magazine every month. But what would be some key takeaways from this discussion that producers should keep in mind?
Really, it's the on-feed numbers moving forward. These tight supplies that bulls were looking for coming into this year, they just haven't quite materialized, and it's looking like that may be pushed to next year. 2025 is such a greater unknown. But as far as the on-feed numbers we're looking at right now, especially with the dairy heifers on feed that have played such a big role. It's hard to see um, uh, much smaller on feed numbers moving forward. They just continue to stay strong, and really 2025 is going to be such an interesting year. It's likely a better bet to see continued volatility than trying to guess price. A big differentiating factor in this cattle cycle compared to that of the last inning in 2014 is the U.S. economy. And there's already a psychological element to the cattle market that we don't see in many other markets. And that's that future sometimes dictates cash markets in cattle, like we've seen in recent. So match that element with all the uncertainty in the U.S. economy, and it's going to exaggerate the already erratic price behavior we tend to see at these still historically high prices.
Trey Freeman, Ever.Ag, thank you so much for joining us today and sharing your insight. We look forward to catching up with you next month.
Thank you, Ann.
For you and our audience, we thank you for tuning in. For more coverage and conversations on beef industry related topics, be sure to check out the live and on demand section of Feedstuffs 365. For Feedstuffs 365 and Beef, I'm Ann Hess.